Let's go next to NEPI, which is known by its larger name or its longer name, New European Property Investments, principally focused in Eastern Europe. I don't know, maybe Central Europe is perhaps what that is, Romania and the likes. It's one of the companies that comes out of the stable of Resilient Capital Group, etc., etc. We'll talk about them a little bit in a bit. Market capitalization, 53.3 billion rand. Huge, substantial, amazing. Historic yield of 3.39%. So give us a bit of the background and the history to this one.
So as a lot of South African property companies are doing more recently, the Resilient Group a number of years ago thought, let's expand internationally, let's hedge our rand exposure. And they came to Central and Eastern Europe, CEE, the CE region. And they found some guys in Romania, of all places, that they backed with some capital, and they put in a South African also in charge of that operation, backed it with capital, and it just took off.
Developments of shopping centres. The model that they developed here, where they'd gone to secondary centres,
yes,
and they'd said, listen, there's a crummy old main street here, or high street. Let's build a nice big mall at the periphery of the city.
Correct, consolidate everything, everyone goes to the mall.
National retailers, international in some cases.
Yes, Romania wasn't quite as developed on the retail side, so a lot of the time there wasn't even a mall. There wasn't a lot of consolidation happening. It was just starting up formal retail in a lot of these towns. And over time, the business has just grown, done exceedingly well, to the point where a lot of the value added in the past was through developments. The company is so large now, it's quite difficult to move the dial with a new development because the development relative to the rest of the existing portfolio is quite a bit smaller. So their best days might be behind them, but there might still be some bright days ahead.
Let's have a look at the share chart. When you say the best days, I mean, that was really
Those are great days,
Those are good days they've had. And the CEO, Martin Slabbert, still remains in place.
No, he's the guy who left. So he's the South African they sent, and he's broken away. And that was part of the concern, that can they continue now with him stepping away? And the new management team, which has been in place for, I think, roughly a year, has taken the baton quite well, and they are continuing in the right way.
Because generally understand that the Brexit thing made all the other Central and Eastern European countries get more positive about the European Union. Because they can immediately see that the European Union, which is really in some ways their calling card and the secret of the modernization of their economies, protects them from the threat from the East, aka Russia. It makes them more part of a centralized economic club, means that they can latch their own economies onto the low inflation environment in Germany and modernize their economies. They've got a higher GDP per capita. I mean, these are quality destinations. Beautiful. Bucharest is a magnificent national capital.
Yes, and the Brexit situation just did highlight the risk that is this now the unraveling of the EU, which wouldn't be great for these countries. Or does it strengthen it because it pulls countries closer to the core? That's a net positive for these countries. So the jury is out. Who knows what politicians will do? But I think still that these countries are well placed, and therefore the populations and the formalization of retail is well placed going forward.
Where are most of the shareholders of this company?
Mostly South African, because of the Resilient Group and South African retail investors that have got such a need for yield plus growth, and you can see in the history of NEPI that they've given both those. So it does mean that we've got a little bit of a hothouse effect in South Africa, where if a company is listed in London, they'll probably trade at a discount to NAV. If they list in South Africa, they trade at a premium to NAV because South African investors like yield and they expect growth. That's why they pay up to a premium above NAV, due to the weakening of the rand. So as long as we have a weakening of the rand, we'll have an extra leg of growth from currency weakening, which will justify a premium to NAV.
We're going to have to go hot or not. Let's have one final look though at the share chart, because did we see a little bit of a sell-off? Yes, we did in June, June, July, and since then it started picking up just a little bit. How do you feel about this one?
We're going to talk about their cousin company, Rockcastle, also a little bit later. So I like NEPI, not as much as in the past, but I'll just still say hot.
Okay. A tricky one for me. I'm going to go not hot again, but I don't feel quite as firm about it as I did on the previous one.